There are some headwinds in the market today that we want to be thoughtful about. Trends in Europe, for example, are a bit slower. Trends in Asia being affected by trade and other considerations are slowing down a bit. We still see positive growth in the US, and that's an important factor in our view that general trends in growth globally will remain positive, although we are concerned that the trends are slowing, and that exposes us to the risk of a shock, and that's the biggest concern we would have today. I think two important considerations. One would be in a low growth environment where we see very low inflation. Interest rates globally are obviously low and expected to stay low. With that in mind, credit is another area in the markets that we think investors need to pay close attention to. With regard to credit, we really think that's a favorable area of the market today because in a low growth environment, companies continue to generate positive earnings. They can use that to reduce their debt burden or enhance liquidity, and those are positives for credit conditions around the world. The risk with low rates is that we can create a bubble environment, and I think central banks do have to balance that risk with the risk of a slowing underlying economy. And that's why we like credit. I think, again, to the idea of credit being positively trending, but also creating that income advantage that benefits investors. They get a spread over those underlying government rates that can be positive in terms of incremental returns.